Let's talk about China pumping crypto. That's right, we've had a narrative over the last year plus about how the Federal Reserve, the dictator of all things financial, wealth, and money across the ever-loving globe that we live on, has just been smothering the markets, smothering them like some Thanksgiving turkey amidst that delicious gravy that grandma puts right on the table, smothering so deeply that there's not a gasp of air. But is there? Is that really the only way to stimulate these markets? Well, it turns out there's a little cheeky backdoor stimulus that we haven't talked too much about here in this global market we call crypto, and that is China. There's a new player in town. China's central bank performed its single largest liquidity injection on Friday to help support the economy out of historically depressed levels. Plus, there's more to come. China boasts the world's second largest economy and has recently expanded at a pace 2.2% faster than the US. The PBOC, the world's third largest central bank with $6 trillion in assets, play a key role in global liquidity. While most analysts are focused on how the Fed's tightening cycle will reprice assets this cycle, they're failing to consider the scale of easing in the East. Japan, fourth largest central bank, plus China are injecting liquidity into global markets, easily outpacing the Fed's tightening efforts. So what does it matter if the Fed is smothering markets like your grandma smothers you as you walk into her house with kisses, leaving incredible amounts of lipstick on your cheek with those grandmother-loving kisses? I like to think of total liquidity like sand in a sandbox, and eventually when you start adding more, it makes its way everywhere. And what happens if you have a global market like Bitcoin and cryptocurrency, where if you take liquidity out of one end but shove it in mass in the other end, more than what you've removed, well, in the end you have more money than when you started, right? Thinking of global liquidity rather than just US in isolation could prove to be more powerful when analyzing crypto markets. The Fed are tightening, risk off, but the world's third and fourth largest central banks are easing, actually causing an uptick in global liquidity. You can see this reflected here in the charts. As infamous crypto trader Andrew King says, the China coin narrative has flipped the regulatory FUD on its head. The more actions the US takes against crypto, the more the narrative is reinforced and induces more shorts to enter the market that need to buy back higher, bullish FUD. Now, what he's saying here is that all this regulatory FUD is creating all these shorts. Those shorts are then getting squeezed and effectively forcing people as the market rallies higher to buy more. So he's saying as the East is adding more liquidity that's getting these shorts offside, it's actually causing a complete rocket fuel effect. United States regulatory FUD about crypto starting to take a backseat to China adoption of crypto narrative. And look at this timing. Look at this timing. Literally on June 1st, 2023, Hong Kong will officially make crypto purchase and sell trading fully legal for all of its citizens. Expect a huge influx of big money from the East. Now, it's well known that a ton of capital controls exist in China, and crypto has long been seen as the way to get money out of China. And a lot of that money in China is actually residing in Hong Kong now. So Hong Kong opening up its capital controls to allow for full buying and selling and possession of crypto is effectively a release valve for money trapped in China. And as this tweeter says, China banned crypto at 60K in April. Then China let Hong Kong buy at 17K in 2023. Phew. I guess the Chinese government is really just trying to psyop you into becoming an excellent crypto investor. Maybe they know something that we don't. The China easing narrative is not some imaginary garbage. Look at the liquidity injections China is ramping up in February. Most recent 835 billion CNY via reverse repurchase. Money printer go burr in the East. Oh, sorry, US inflation. China exporting more. Oh gosh. So once again, like I've been saying, temporary Goldilocks theme is now getting some absolute firepower, this time from the place you least expected, the east of China and Japan. No, the US government doesn't control everything. But what does this really mean? Well, this means that the US government's desire to pull back inflation by smothering assets, just by raising interest rates and stopping buying as many treasuries and securities, well, that's actually not going to have the effect that they wanted. Here's what I think's about to happen. I think assets, global ones like the Chinese stock market and cryptocurrency, are about to rip based on this narrative, or at least they'll have a decent amount of support. But then what happens if the US government starts to sense that this Chinese exported inflation is starting to create more inflation in the West? That's right, it's a global market here. And if money printer go burr in the biggest economies outside the US, well, that's bound to have some inflationary impact within the US. What kind of effect could this have on the supply chain? What kind of effect could this have on external investment into the US economy? It's very simple to start seeing how Chinese and Japanese inflation would start ticking up inflation in the West, meaning that we could see a second spike of inflation that is far more severe than this first spike, but not yet. Bitcoin's 90-day chart here looks absolutely excellent. As you can see, there's been some cooling off. We got the regulatory FUD here. If you guys remember, I made a video when the regulatory FUD came and I was like, I'm not buying this. This is not a big dip. This hasn't broken any significant levels. This is a massive whale fake out. And it turned out that it absolutely was. And we've ripped. And remember what I said in that video? I wouldn't be surprised to see Bitcoin rip up to the high 20,000s and then altcoins go crazy. And that's where we get the crash, this second half hard landing that everyone's been predicting. Now, I'm going to be real with you. I don't know if I believe 100% that that's going to happen. I've been positioning around it, but I do believe that we will have some kind of cool off from this. But I'm going to tell you exactly how I'm playing this at the end of the video. I actually have been enjoying this rally so much. I think a lot of people on this channel think I'm hating this rally because I didn't call the bottom. If that was the bottom, again, jury's still out on that. Put it this way, if inflation rips to a new high, the government's going to have to go absolutely pull out all the stops in order to bring it under control. They've said that that's their mission and they're going to do it no matter what. And sticky inflation, if you look at past decades like the 70s, was extremely hard to control. There were all kinds of pumps on the stock market and assets, and those led to absolutely crushing collapses. That could absolutely happen. In fact, almost every single investor in the world thinks that that's what's going to happen. But right now, what we're seeing is this temporary Goldilocks theme start to get wildly extended. And this China printing inflation narrative could mean that we get an absolute monster rally out of risk assets, during which I'm going to be playing this market. In fact, what I'm going to be looking for specifically is for Bitcoin and Ethereum to completely level off and start actually going down meaningfully in volume, and then see the altcoins completely rip and face melt some gains. Because when you see that happen, when the altcoins absolutely go buck wild, bananas, face ripping gains, that's when you know that probably, just probably, that moment in the market is over. You see, the way it works is Bitcoin and Ethereum, then large caps, mid caps, and then, pretty much horrible altcoins go absolutely wild. Meme coins, everything starts pumping. And that's when you know that the whales are probably getting ready to cash out. That hasn't quite happened yet, though today was actually a pretty significant day for altcoins. They're kind of just playing catch up. We can see here that Bitcoin is still almost near its all-time high of this cycle. And the all-time high peaked for a second over 25K. It's been flirting with this 25 number. Now, if it can meaningfully bust through 25, start retesting it as support and make its way up to that 28 to 30K range, now we're looking at a spot where I think it's likely, or it's at least something that you should have some caution around, as that could be the area where we see this happen, where effectively Bitcoin levels off, maybe starts coming down, maybe even breaks a little bit below 25 again after flirting with that 30K for a while. And then you see altcoins just going crazy. You don't understand it. 100%, 200%, 3, 5, 10x overnight with these altcoins. That's when you know the greed has completely infected the markets. Most people are now just jumping off the sidelines with FOMO, and that's exactly where the whales want to get you, where you're not thinking anymore, you're just acting emotionally. Now, I personally am excited for this rally. Like I said, I haven't been risking a ton, though I have ramped up my exposure a little bit here. I'm taking it slow because I believe that the future of this whole market is going to take its time going back and forth. I believe that the market is going to go through fits and starts, but in the end, the way to win this game is long-term stable accumulation. You will not find me getting emotional. However, you are going to find me playing more and more in the sandbox. Again, the way to enjoy the pumps and the dumps is to manage your position size and to understand that the way to truly get rich in crypto is to have a very long-term time horizon on how you play the game, to invest very responsibly based on how much capital you have. And that way, when things go up, you're excited, and when things go down, you're not so freaked out and you don't paper hand and sell. And just like I've been hearing, I know you guys want some altcoin coverage, so I'm gonna be making a video going over the types of altcoins that I would buy, not necessarily exact ones, but giving you a sense of portfolio construction by narrative, by segment, helping you understand my approach and my thought process on how to construct a good portfolio for the next cycle of cryptocurrency. As always, I'm EllioTrades. If you enjoyed this one, you know what to do. Make sure you follow me on Twitter. Got some banging tweets and some interesting content coming out as well. What are you guys waiting for? Put that bell notification on and set notifications to all, and I'll see you on the next one.